and having more than 2 decades of research experience. He has guided more than 6 PhDs and 30 MPhils. He has published papers in various reputed journals. He has presented paper at Harvard University, USA and Griffith University, Australia. He is an author of more than 30 books on various commerce and management subjects. He is a member of Academic Council, Bangalore University, and other academic bodies. He is having an award, Best Teacher Award by Rotary and Karnataka Civil Defense Corps, received from then Governor of Karnataka, His Highness Dr. Hansraj Bharadwaj. Is awarded Abdul Kalam Gold Medal Award from Global from Global Economic Progress and Research Association. He is an innovator of 360-degree education for wholeness model. He's having his own website, that is www.sanilkumar.com. Thank you. Thank you, sir. Over to you, sir.
Thank you, Professor Srihari. Good evening. First of all, I would like to take this opportunity to welcome the resource person of today's webinar, Mr. Lokesh Naik, for accepting our invitation for this particular program. And also, I would like to appreciate the initiative taken by the Department of Commerce, the head of the department, Dr. Nagaraj, Professor Srihari, Ajay Kumar, and also Mr. Gokul and others in the department. And I'm very happy to see there are about 156 participants in this particular webinar. It shows the kind of interest people are showing in all our programs, all the SSMRV programs. Always I say SSMRV College is one of the knowledge destination for all the faculty members in throughout India. So I'm very happy to invite and welcome all the participants for this very innovative, very important webinar on income tax assessment by the very well-known and very resourceful speaker of today's webinar, Mr. Lokesh Naik. And SSRV, all of you know, is one of the oldest, it's about 80-year-old institution which runs about 22 institutions from KG to PG and research centers, including professional colleges like RV Engineering and MBA colleges, degree colleges, PU colleges, high schools, and from all different kind of institutions. And SSMRV is about 35 years of old institution, and it has been recognized by the NAC with A grade, accredited by NAC with A grade. And also very happy to say that the college has been recognized or ranked one among the top 5 colleges in India by India Today from 2017, 18, and also in 19. So I'm very proud that, and also very thankful to all the faculty members, students, and the management for achieving this particular goal, achieving this particular success. And also our students have been, you can say, absorbed by the many MNCs, and our placement rate is about 96%, and students have got ranks and gold medals in the Bangalore University examinations earlier. So I'm very happy to once again welcome all the participants for this particular webinar today and tomorrow. And I wish all the participants and the resource persons have a good time and have a productive time in learning the latest changes which have been brought in income tax. Actually, because there are two ways of doing it: old method and new method. So there are a lot of, I think there is a lot of doubt in this, whether to use first new method, new or the old method. So I think this will help you to learn more about on this in these 2 days. So I once again welcome all of you for this particular webinar organized by the SSMRV College, Bangalore. Thank you so much.
Thank you so much, sir. We are really blessed to be guided by a leader like you. Thank you so much, sir, for all the encouragement. A lot of effort has gone in organizing this program. I would like to introduce the organizing team. It is headed by Dr. S. Anil Kumar. You've just heard. Another leader who backs us up, who pushes us, who encourages us, Dr. Nagaraj, sir, Head of Department of Commerce. He's also the coordinator of IQAC. Young dynamic leader, Mr. Satish, MD, coordinator of Taxation Club. Mr. Yellappa, the co-convener of Taxation Club. Mr. Srihari, the member. Mr. Gokul, who is also a member of IQAC and Assistant Professor, Department of Business Administration. Now I request Professor Yellappa, sir, to introduce the resource person for the day.
Okay, thank you, sir. Good evening, everyone. Tax is not a four-letter word. Rather, it's the price we pay for the country we want. I'm very happy and glad to introduce today's resource person, CA Lokesh Naik S H, Accounts Officer, KPCL, Government of Karnataka. He holds a graduation in BBM from RC College of Commerce and Management, Bangalore, with aggregate of 81% and college topper. He completed Chartered Accountancy, Professional Education 2 with All India 7th rank. And he's completed his articleship from Deloitte Haskins and Sells, Bangalore in AERS department. He is specialized in various subjects such as cost accounting and financial management, cost and management accounting, tax laws, company accounts, financial treasury and forex management. He practiced as a chartered accountant from 2013 to 2017. He also is a faculty member for various institutions such as K2 Learning, HITOP, Trisha Class, BRICS for CACS, Christ University, GFGC Kengeri, Vidyashrama Mysore, and Government RC College Bangalore, etc. For his achievements, he received Sri Sultan Chan Award for Group 1 topper in All India Professional Education 2 exams, November 2007. He received gold medal for the achievement from ICAI. He also received Best Outgoing Performer Award from RC College of Commerce in 2006. Apart from the above achievements, his awards and recognitions are many in the various fields. With this, I conclude my introduction speech and by thanking our principal and HOD for giving an opportunity. Thank you all. Now I request our resource person to take over the session.
Thank you so much.
Good evening all. Is it audible?
Sir, it is audible, sir. You can start.
Yes, sir. Sorry, sir. My SAP connection was lost. So it was afternoon also 1 hour my connection was lost. So I was doubtful about this. But through mobile also I made a backup. But mobile through I'm receiving it. I'm extremely sorry. So let me start my presentation. So now, I'm Lokesh Naik. I'm a chartered accountant. I was in practice now. I'm with the government organization as of now, as working as accounts officer. So I'll be dealing with this income tax, assessment, returns, and refund. So let's start with the basic aspects. So first, the basic aspect. Let us discuss the components of income tax law. Whenever we say income tax law, yes. So these elements we need to consider. One is Income Tax Act 1961. Then, so Income Tax Act 1961 is supported by rules. Income Tax Act. So Income Tax Rules 1962. So rules are basically to make the smooth functioning of the act. So it will be changed from time to time. Yes. So then Income Tax Act 1961 is too old. So what is happening? Every year it will be tinkering and patched. So somehow it's on and on. We are taken till 2020. So therefore, what government has decided from last 10 years, they are working on DTC, Direct Tax Code. So once this DTC comes, the Income Tax Act 1961 will be repealed. That means it will be taken out. So every year, what happens? Any amendments to Income Tax Act, it happens through Annual Finance Act. In Annual Finance Act, according to time, whatever the tax rates required, what are the provisions to be changed, those things will be handled. Next, circulars and notifications. Circulars and notifications will be binding on department. Yes. So these circulars and notification from the time will be keep checking, so updated, so that these things will affect us also. Then legal decisions. Whatever the legal decisions of High Court, Supreme Court, and then Appellate Tribunal. So these things also will be having a bearing on our, yes, so law. So whenever we say income tax law, we need to remember that Income Tax Act 1961, Rules 1962, Annual Finance Act, right? Annual Finance Bill, you know that all of you, the Union Finance Minister will be presenting in February. So once it is passed in both the houses of Parliament, it will be signed by the President. Once the President signs it, it becomes Finance Act. So these are all components of income tax law. Then let us understand, so total income computation and the taxability. Steps for computation of total income and taxability. See, first and foremost thing what you have to understand is residential status. Residential status is most important for income tax computation. See, we need to understand what is the difference between residential status and citizenship. See, one thing you have to understand, citizenship has nothing to do with your income tax calculations. It is the residential status which has to be decided every year. The residential status has to be decided every year. Every year residential status will change. That's what it is now. What is the residential status? Depending upon your number of days stay in the country, it will be decided. So you can, according to the number of days stays in the country in the previous year, your residential status will be decided. It can be resident. A resident is further classified as ordinary resident and, yes, resident, not ordinarily resident. And then opposite to that is non-resident. So what is most important is residential status determines you whether for a particular income you are taxable or not. Then comes classification of income under various heads. So we all know that we have 5 heads of income. First one is salaries, and second one is house property, and third one is so profit and gains from business or profession, and fourth one is capital gains, and last one is other source. So as you know, most of the today those who are attending seminar, so we'll be dealing with the salary class. That's what it is now. So as you know, for a salary there should be employer-employee relationship. Even if it is a pension also, it is covered under salaries. That you have to remember. So all these 5 heads, different heads, so cater to the different charging section. Depending upon the charging section, so these things, computation of incomes under various heads happens. When you say salary, so your salary, pension, perquisites, so every allowances, so all these things will be covered. So we are not getting into that detail as of now. Yes. Next, computation under each head. Like we discussed, we have to compute the income under salaries, house property, and then capital gains, if it is any transfer of capital asset is there. So business or profession, those kind of stuffs. Next happens clubbing of income. So what is this clubbing of income? Suppose you have transferred the income to spouse, right? At the time, your income and spouse income will be clubbed and it will be assessed to tax. In case of minor child, that's what it is now. Your clubbing should happen. Next comes set off and carry forward of losses. The set off and carry forward of losses is very important. Why? Because this is most important for business associates and as well as for individuals also. If any loss is there, you can carry forward that loss for the next upcoming year, next assessment year, and you can set off with the next year's income or profit, whatever it is. The most important thing is for the set off and carry forward of losses is, yes, we have to file the income tax returns in time. So if you don't file income tax returns in time, whatever the time limit is given by the department, so you can't set off and carry forward. So especially if you are having loss, or that's what is known, if you are having loss, what people does, so I'm having loss, so I will not file returns. You should not do that. Whenever this loss is there, you have to be much more careful. Why? Because if you don't file the returns, you can't carry forward the loss. That's what you have to remember. Next, computation of gross total income. So whatever the taxable income under 5 heads are there, that is, so taxable salary, income from house property, like that it is now. So whatever so ultimate the profits from the business or profession, capital gains, and then other source. So that is what constitute gross total income. Then deductions from gross total income, which we'll be discussing today. So whenever we heard the word exemptions, you might have heard, and then deductions you might have heard. So let us understand what is the difference between exemption and deductions. Exemptions, what happens? It never form part of total income. For suppose let us say HRA. So partly it is exempt. It will never form part of whatever the exempt portion is there. It will not form part of salary income, right? Like that it is now. So the point to be noted is exemption do not form part of gross total income. Then what about deduction? Deductions are deducted from the gross total income. Yes. Next things happens from the gross total income. Once this chapter 6 deductions, that is ATC, all those stuffs, once it is deducted, will arrive. Yes. So taxable income. Here TI refers to taxable income. So once taxable income is determined, yes, based on that we'll apply the rounding of provision. So once taxable income is determined, apply the tax slabs and arrive tax liability. That's how it is now. So important definitions. So you know some of the important definitions. Let us understand assessee. Who is assessee? In simple layman's language, the one who is liable to pay taxes. Sometimes you have to remember that assessee includes assessee in default, right? Like that. Suppose employer, if he fails to deduct TDS, then he becomes assessee in default. Those kind of things also you have to remember. Assessee in simple language, layman's term, it means the person who is liable to pay tax under Income Tax Act. That's what it is now. Then assessment, basically assessment means in simple words it is estimation of your income based on whatever you have filed. Based on assessment, we have to do that sort of person. As you know, there are 7 categories of persons. So natural person, like human beings, will come natural person. We have AOP, BOI, body of individuals, all those things. Then income definitions, as you know, there are many incomes. We have income from salaries, house property, capital gains, all those things. But the most important thing is in income, you have to remember that loss is also income.
Lokesh sir, sorry to interrupt you. Probably your slides are not being changed accordingly. So it is not syncing. That is what most of the participants are doing, messaging in the chat.
First slide only, just letting know, just running to the first slide.
Okay. So please do. So participants, he has not yet changed the slide. He's still on the first slide. Thank you.
Yes. So just we are seeing the definition of person. That's what is now. There are 7 categories of persons. So natural persons we have, and then company we have, AOP, association of person we have, body of individuals we have, then artificial juridical person, all those things we have. Then next definitions comes income. The income definition, as you know, so it's income. Whenever I say, it's not only positive income, even negative income also will be considered. Next definition is India. So when you say India, what comes to our mind is India map. So one thing you have to remember, it is not only the landmass you have to remember, but also territorial waters. Next, assessment year. As you know, assessment year, once the previous year ends, as on 31st March, for example, let us say 2020. Our assessment year will start from 1st April 2020 and it ends on 31st March, yes, 21. That's what it is now. Previous year. Generally, financial year, whatever financial year is there, we call it as previous year. Next, last term is the maximum marginal rate. The maximum marginal rate or average rate, whatever is there. See, that means in income tax, we'll be having a lot of rates. So 5% slab, 10% slab. What is the maximum rate we are having in that financial year? That's what it is now. As of now, we have 42 odd percentage, right? That's what it is now. Yes. Then, so tax computation overview. So 2 minutes we'll go to tax computation overview. Yes. So now a small example I have presented here. You can see income from salary, basic salary, dearness allowance, bonus. So all those benefits, whatever is there, that's what it is now. So gross salary. From this gross salary, what you have to deduct? Actually, deductions under 16 we have to deduct it here. So whatever it is, standard deductions, all those stuffs. Then income from house property will be having all those. So up to 2 lakh rupees, we can take the benefit. Whatever, if you are paying interest, if you are having interest, so more than 2 lakhs also, it can restrict it up to 2 lakh rupees. Done. Income from other sources. Generally, we are not covering business and profession capital gains. Yes, income from other source. Interest income, whatever interest income is there. So accrued interest on NSC, dividends. See, dividends, one thing you have to remember, till the last year, whatever the dividend income was there, it was exempted under 1034. Now from the budget 2020, what has happened is, whatever this dividend income is there, so it will become taxable in the hands of, yes, recipient. In the sense, it was earlier what happened is we had dividend distribution tax. We had something called as dividend distribution tax. Because of this dividend distribution tax, whatever the dividend, whenever company is paying, the taxation used to happen in the hands of companies. So now that provision has been removed. Like once again we are back to 1980s. In 1980s, the provision was whoever is receiving dividend, he has to include that income in his income and file the taxes. So now onwards, if any person is receiving dividend income, you have to include the dividend income in your calculation of income and file the returns. So total income, whenever we say total income, it's a basically, yes, total income of all, salary head, whatever it is, in house property, PGBP, and then capital gains, and we have other sources. From here, what happens? We have gross total income. So from gross total income, standard deduction. Actually, in standard deduction at the 16, it will be deducted from salaries income. So you have 50,000, straight away it will be deducted. And one more standard deduction is, as you know, yes, what is the tax on employment and on entertainment allowance. These things will be deducted from salaries. So once gross total income, you have this, whatever this 23,29,000 you are seeing, this will be my gross total income. Gross total income, whenever I say income from salaries, income from house property, income from PGBP. PGBP means profit and gains on business or professions. And one more is capital gains, other source. All these things will be included. From this gross total income, 23 lakhs, whatever we have in gross total income, we need to deduct deduction. That is chapter 6 deductions, section 80C, 80D, 80C, 80D, all these stuffs we are going to discuss in details. So 80G, donations, like that 80 TTA. So basically chapter 6 deductions we are going to take up separately today. So from gross total income, we need to deduct this chapter 6A deductions. So from gross total income, if you deduct deductions, we'll arrive taxable income. On this taxable income, we'll apply the tax slabs, right? We'll apply the tax slabs and arrive the, yes, what is the total tax payable, right? Like that it is now. Yes. Now, deductions from gross total income. Deduction from gross total income, it depends. How this deduction is decided is, so deduction in respect of certain payments. So based on certain payments, for example, all of you know, if you pay LIC, right? LIC premium, if you pay, whatever the premium you paid, that is allowed as a deduction, like that tuition fees. So those kind of stuffs. That means certain deductions are available based on what? Based on payments. That is what you have to remember. And There are certain deductions which are available in respect of income. That's what it is now. So when I say certain income, employment of new employees, that means here they are trying to encourage the entrepreneurs. That means if you include more and more employee, if you recruit more and more employee, some deduction is available. Those kind of things. Then deduction in respect of other income. So other income, as you know, interest on deposits in savings bank account. So those kind of things. We'll be discussing these things. Other deductions, deduction in case of person with disability. So person with Divyang, so ATU we are having, where the assessee himself is a, yes, disabled, right? That's how it is now. The same thing what we discussed as of now, deductions. Deduction from gross total income, deduction in respect of certain payments. So deduction in respect of certain payments, we have ATC. ATC in respect of your life insurance premium, PPF, PF, etc. And then ATCCC we have, CCD we have. Then ATD is very important for all of us. Medical insurance premium, we'll be discussing little in detail with respect to this. ATDD we have in respect of maintenance of what, tell me, person of dependent with disability. If you are a dependent, that means children, so dependents, if they are disabled, so those will be eligible for this benefit. Next we have ATDDB. ATDDB we have basically medical treatment of specified diseases. These specified diseases are notified by income tax. So those specified diseases, if you make any treatment, you are eligible for deductions. ATE, as you know, whatever the interest we take for our higher education, interest on loan for higher education, whatever the interest is there. So from the, once you start earning, right? So they start paying for 8 consecutive assessment years, you are eligible for this benefit. These are all new provisions, ATEE, EEA, all those things. ATG, as you know, donation to some certain funds, charitable institutions. Then ATGG in respect of rent paid. That's what it is now. If you are not in receipt of HRA, suppose you are not receiving HRA, so then you can make use of this rent paid. If you are salaried class, still you can make use of this ATGG, rent paid. Then ATGGA, these are with respect to donation for scientific research and rural development. For any scientific research and rural development, you are contributing. So here you will be eligible for deductions. ATGGB, once again, is a political contribution to political parties by individuals. ATBB is individuals. So then GGC, it is for the individual contribution by individuals to political parties. One is companies and one more is individuals, remember. Next, deduction in respect of certain incomes. These are all based on incomes, just as you know. So ATJJAA in respect of employment of new employees. If you are employing new employees, if the organization is recruiting new employees, so then what happens? Certain deductions you are eligible, those kind of things. ATRRB in respect of royalty on patents, so those kind of stuffs. Deduction in respect of other incomes, as you know, ATTTA, these are all new provisions. Some 5-6 years back it came in respect of interest on deposits in savings account. Up to 10,000, you can avail this benefit. ATTTA, yes. And then ATTTB, this is with respect to senior citizens, interest on deposits. Last one, other deductions we have, yes, ATU we are having deduction in case of person with disability. As I told you in the previous slide, here the assessee himself is a physically challenged, or we can say Divyang. So let us discuss the chapter 6A deductions. Chapter 6A deductions, let us discuss in details. So first one, ATC. As you know, ATC limits, so every layman know this ATC. ATC limit is how much? 1.5 lakhs. So 1,50,000, till that you can claim the benefit. So now this ATC, it is available in the old regime. ATC benefit is not available in the new regime of taxation. So now let us see what are all payments. So we just now we saw the list. Deduction in respect of certain payments. Certain payments are eligible for deductions. What are those things? Let us see. First, as you know, life insurance premium. So as you know, it is life insurance premium. Yes, life insurance premium, whatever we pay, it is eligible. Yes. So, but one thing you have to remember, 10% of sum assured. For example, let us say we have taken a policy for 10 lakh rupees. So 10 lakh rupees you have taken, 10% comes to 1 lakh rupees. If in a single year, if your premium is less than 1 lakh, then it is eligible. Suppose you paid a premium of 1.5 lakhs, then up to 1 lakh rupees you can claim. So beyond that you can't claim it, right? Next we have, so most popular is this annuity and all we are having, especially the person, those who are going to get retired. So they'll be worried about the annuities and all pensions. So before that people will plan about the retirement life. They'll invest in annuities. Yes, in simple terms, annuity, what happens, let me tell you. So there are annuities by the life insurance companies. If you invest in the annuities, what happens? So attaining 60 years or whatever you have defined in the policy, you will start receiving pension from the insurance company side. That's how it is. Contribution to Provident Fund. Provident Fund, as you know, and then PPF. Public Provident Fund, it's very popular. So one of the highest interest paying PPF, but lock-in period is good. But the power of compounding, you'll be having a good amount you are going to get after the lock-in period. Then subscription towards NSC 8th issue. This is also very popular, NSC 8th issue. A fixed interest rate you'll be getting. So those are conservative investors. Generally they opt for NSC issue. So then we have UTIs, unit linked insurance plans, LIC, Dhanaraksha mutual fund we have. Some of the approved mutual funds in 1023D. And this is very important. If you have taken a housing loan, whatever the principal and housing loan we pay, so up to 1.5 lakhs, whatever it is. So total deduction at ATC is 1.5 lakhs. Whatever the principal amount we pay, so that is also eligible under ATC benefit. Tuition fees, the only tuition fees available. So with respect to donations, some computer development fees. So the schools will collect the fees in many forms. So all those fees are not eligible. Only the instruction fees, that is tuition fees. So only for 2 child you can claim deduction under ATC. That is what you have to remember. Then equity linked savings scheme will be having, infrastructure bonds. So FD, and one more very popular is fixed deposits. So notified fixed deposits on from scheduled banks or housing finance companies. But these things, what is the lock-in period is minimum 5 years. So 5 years and more, if you deposit your money in the scheduled banks or housing finance company, so then you will be having a ATC benefit. Then NPS Tier 2. This is very important. NPS Tier 2. Many people, this is very new to this concept. Many people, they start investing in this NPR Tier 2. So do some research with respect to NPR Tier 2. It's very interesting. Even though people are salaried, so they are opening their NPS Tier 2 account and they start putting the money towards their pension obligations. Next. So we have, once again, investment in equity shares, debentures of the finance institutions, but 5 years, you remember. And one more is investment in 5 years. Yes, time deposit. Time deposit means fixed deposit of post office. Post office 5 years deposit. Then investment in senior citizen savings scheme. This is also very popular. So nowadays it has introduced this provision. Some few years back this has come into picture. Investment in senior citizen savings scheme. Yes, senior citizen or those who are on verge of getting retired. So those on verge of getting retired. So just do some research with respect to senior citizen savings schemes. It will be helpful for you. And one more very popular, some 10 years back we came across Sukanya Samruddhi account scheme. If you're a girl child, you can start an open in post office or bank, wherever it is, and start depositing the money towards the girl child. The interest rate is very attractive and the power of compounding also will be very good. At the end of the period, whatever it is, the maturity term, you'll be receiving a good sum of money. These are all things with respect to ATC. Yes. Let us go on and discuss some of the other things. So ATCCC and the CCD is similar to ATC only, and this is very interesting. ATCCD 1B. That's what amount paid and deposited to pension scheme of central government. That will go through this. Similar one we have. Yes, ATCCD 2. This is with respect to NPS paid by employer. If NPS paid by employer, whatever is there, yes, so it is eligible for deductions. What happens if it is not eligible for deduction is it becomes taxable in the hands of salaried person, employee. So he will be suffering tax. Therefore, what government has decided, whatever the employer contribution of NPS is there, that is not taxable. Deduction is available with respect to that. ATD, very popular is ATD. So this is very important deduction which is available. So most of the individuals, salaried class individuals, you have to make use of this. Why? Because as you know that the health expenses, the healthcare expenses in the country by day it is going up. Let me tell you, if you take a health insurance premium, 25,000, let us say you are paying the premium, example. Now in next 10 years, let's say 25,000 you pay, that means 2.5 lakh rupees will pay, example I am telling. So if in the 10 years, if any family members get hospitalized, let's say 2.5 lakh rupees you are recovering from that. In the sense, you need not pay the hospital bill. So that is almost like a paisa vasool. Whatever this 2.5 lakhs you are paying over a period of 10 years, that's what is now. So it is very important. All of you should make use of this benefit, especially the salaried class. In the the pandemic and all is creating a lot of problem. So health insurance is very important. Let us see. This ATD is a very important provision. Still, many salaried class they are not aware of this provision. Amount paid to health checkup of spouse, self-spouse. That's what it is now. You remember self-spouse and then dependent children. This is what you have to remember. It is a dependent children. So up to how much? 25,000. So provided the assessee is not a senior citizen. So if suppose let us say 35 years old, your assessee one. So you can pay 25, whatever the premium you would have paid, up to 25,000, you can claim it as a deduction. Yes. So now here, for self, spouse and dependent children, self, spouse and dependent children, up to 25,000 you can claim. Yes. In case of what? Individual and HUF. So Hindu undivided family. For parents, so what you can do? You can claim up to 25,000. If suppose either assessee or parents, if any one of is senior citizen, up to 50,000 you can claim the benefit. That's what you have to remember. So now mediclaim insurance taken on life of senior citizen. So 50,000. Suppose I will tell you example. So assessee, let us say X is assessee. He is age of 30 years. He is of 30 years age. In 30 years, when he is of 30 years age, let us say he is paying premium. His premium, he himself, spouse, child, 25,000 eligible. But his parents, let us say senior citizens, up to 50,000, yes, he can claim the deductions, provided he has paid the premium. So 25 plus 50. So totally 75,000. One more example I give you. The assessee himself is now, let us say, senior citizen. The assessee himself, when he is senior citizen, so assessee can claim 50,000 deduction. And for their parents, obviously when assessee is senior citizen, parents has to be senior citizens. If parents citizens, for parents also 50,000 you can claim. 50,000 plus 50,000, 1 lakh rupee benefit you can claim. And one more very important provision, please concentrate all of you. This is very important provision. This provision most of you still don't know. Suppose let us say the assessee spends for the medical expenditure, yes, of the very senior citizen. Who is a very senior citizen? Who is a very senior citizen? Very senior citizen means 80 years plus, like that it is now. So for 80 years plus, very senior citizen is the definition given. Some people we call it as super senior citizens. If you are spending medical expenditure for them, so up to 50,000 rupees you can claim the deduction. This you have to remember. So very senior citizen means, yes, 80 years plus. That's what it is now. So if a person is 80 years plus, for there, even though you don't have medical insurance, yes, suppose let us say in Apollo hospital bill has come more than 50,000 rupees, you can claim up to 50,000 rupees, you can claim deduction. So this is with respect to ATD, very important provision. All salaried class you should have in your investment. It's basically not an investment, it's a deductions you'll be getting this. It's a kind of investment only. Why? Because if something happens in upcoming period, you're going to get the benefit. ATDD. See, this ATDD is what happens. The dependent with disability. Suppose the child is disabled. In those kind of circumstances, you can claim the benefit towards the medical expenditure. Either for expenditure, you can claim medical expenditure, or if you are depositing the amount in the LIC, UTI schemes, still you can claim. One is expenditure and one is deposit of the amount. Yes, up to 75,000. Yes, if there is a disability. I mean, up to 75,000 you can claim. If the disability is how much? 40%. Who will certify this 40% disability and 80% disability? That's the doctor's job. You have to procure the certificate from them. So they will give the certificate for this 40% and 80% disability. If the dependent is 40% or more disabled, right, but less than 80%, you can claim 75,000. If the dependent is more than 80% disability, 1.25 lakhs, 1,25,000 you can claim. Yes. Next, 80 DDB. DDB, let us start. Yes. 80 DDB. Screen not visible.
Lokesh sir, it is visible.
Yes,
You can start.
The slide is visible now, sir.
Not now. Earlier
Yes, sir.
it was. Now it is visible.
Sure.
You can continue.
80 DDB, expenditure in respect of medical treatment. So as you know, so what happens? Some of the specified diseases are there. Like you can see here, cancer, AIDS, and then some of the kidney failures, like that it does now. For the specified diseases, medical treatment of specified for self, the assessee himself, or dependents. Dependent relatives, it means your wife, spouse, child, all those things. In case of medical treatment of specified diseases, that list is given by the department. Income tax department has notified the treatment of the diseases. If those diseases you are treating, either self, dependent, so you are treating, then up to 40,000 you can claim the deduction. That's what it is now. In case of senior citizen, 60 years and above, you'll be having up to 1 lakh rupees. Very senior citizens, like I discussed, 80 years. So 80 years, we also call them as super senior citizens. Some places, these people are called as super senior citizens. Senior citizens, once you attain the age of 60 years, you'll be called as senior citizens as per the Income Tax Act. Once upon a time, some 10 years back, it was 65 years. It has been brought down. So from last 10 years, it is 60 years. So now see, very senior citizens, once again, 6-7 years back, this concept has been introduced. 80 years and above, we call it as very senior citizens or super senior citizens. So up to 1 lakh rupees for their treatment. So this is what you have to remember. 80 DDB, very important. If any medical treatment of, it's only for specified diseases, not for all diseases. You have to check whether those medical treatment is for specified disease. If it is yes, keep all the bills with you. Why? Because tomorrow scrutiny may come up. See, income tax is a voluntary provision. Everybody should know that. See, income tax comes voluntary. So once the scrutiny happens, if you are unable to produce the bill, so then you'll be caught. That's what you have to remember. I have seen my previous offices and all, simply people will be claiming the benefits without the bill. So once you will get caught with a penalty, what does that tell me? Concealment, all these things will be heavily, will be penalized. So better you'll be having bills for all these things. So what you can do, the bills you can scan and put it in mail. So that bill will be available even after 10 years. Up to 8 years, the case can be opened. That's what it is now. Yes, let's move on further. 80 DDB over. 80E, it is for the educational loan. If you take an educational loan, so for self, spouse, children, whatever it is, once you start repaying the loan, next 8 assessment year, you can claim the interest benefit. Only interest, not principal. Any amount of interest. There is no such, yes, limits as such. 80EE, these are all new provisions which is introduced in 1617. Financial year 1617 introduced. Those who don't have houses. So if you are a first time home buyer, So these provisions are introduced. These provisions are introduced. The benefit, interest benefits, whatever is there, up to 50,000 you can claim. And then one more provision we have, 80EEA. 80EEA, once again, it is introduced in financial year 1920 for a new home buyer. Yes, the value of house should not exceed more than 45 lakhs. Up to 1.5 lakhs interest, whatever is there, you can claim additional benefit. This provision is pretty new. If you are considering to purchase a car, so you can consider it. Electric car you can go for. Interest on repayment of loan, only the interest aspect, not the principal repayment. The whatever the interest is there, that will go towards, yes, claiming the deduction. So this is a separate deduction. It is not mixed with ATC and all. It is a separate deduction. 80EEB, up to 1.5 lakh rupees you can claim, yes, per year. 80G donations, as you know, well, see, you might have seen last year what happened. The Kodagu crisis happened. 2 years back, the Kodagu landsliding happened, and the last year the Uttar Karnataka, the flood and all happened. If you are contributing towards the CM relief fund, PM relief fund, there are two categories here: 100% donation and 50% eligible deduction. So you have to see which category it is. 100% deduction means whatever you have claimed, whatever amount you have paid towards the donation, entire amount you can claim it as deduction. For example, let us say, so every year, one day government salary will be deducted. Government employees, one day salary will be deducted. Chief Minister Relief Fund. So that will be claimed here 100% deduction. But this Nehru family, why I am saying is, this is a shortcut to remember. So PM's Drought Relief Fund, Jawaharlal Nehru Memorial Fund. So these, some of the Nehru family, these donations, the name starts with the Nehru family names. That's why we call it as shortcut to remember, 50% donation category. So the donations whatever making, the entire amount is not eligible. Only 50% is eligible. Actually, there are 4 categories here. Let's not get into that. Remember, whenever you are going to donate, first check it comes under which category. First, you need to ask question whenever any charitable institutions or anything, when they come for donations. First, you ask whether it is 100% donation or 50% donation, which falls under which category. Then one more, next we'll go to next provision, 80GG. See, 80GG, if suppose individual, so obviously individual pay your house rent, like, so those are not in receipt of HRA. If you are not receiving house rent allowance, so then what happens? As an employer benefit, you are not receiving HRA, then what happens? But still you'll be paying rent. You can claim that whatever the rent paid is there, this deduction you can claim. The deduction is 5,000 per month. That means 5,000 into 12, 60,000 or 25% of your income. So you remember that not more than 60,000, not more than 60,000, you can claim benefit here. Then 80 TTA we have. 80 TTA, once again, this is interest with respect to SB account. So up to 10,000 rupees. That's what it is. Now sometimes what happens, the TDS might have made by the banker itself. On your savings bank account interest, whatever is there, the banker might have made TDS. So include that income, TDS income, your IT return filing, and then go ahead. You can claim deduction of 10,000 rupees. TTB, it is for once again senior citizens. This benefit is available up to 50,000 interest. ATU, this ATU is nothing but here the assessee himself is a Divyang person, disability, right? Like that assessee with a disability. Like if you are 40% disability, like I told you, the disability percentage is decided by the medical professional people. Medical professional people will certify what is the percentage of disability. If you are more than 40% disability but less than 80%, so then you up to 75,000 straight away. You need not deposit a single pie wherever. By default, if you are a disabled person, if you are a Divyang person, 75,000 you can claim the deduction by default. That's what it is now. Or else, if it is 80% disability, if a person is 80% disabled, then 1,25,000 you can claim the deduction. See, in our office, I have seen one of my colleague. He is blind, 100% blind. That's what he can't see anything. His 2 children are also blind. So what he will do? He will claim ATU benefit here. ATU benefit as assessing, he will claim 1,25,000. The dependent. So 80 BD here. Yes, 80 BD here, since the children are also 100% blind, so Divyang, here once again he will claim 1,25,000. That means he will be claiming 2,50,000. So this only remember, yes. So both the provisions available, dependent with the disability, and then ATU where assessee himself is a disabled. So this is with respect to the deduction. So you can make maximum usage. As per my knowledge, what you can do, ATC benefits, depending upon the power of compounding, you decide where to invest. Depending upon your risk profile of investment, you decide. ATD, so I request mandatorily everybody should have in their kitty this medical insurance, because health expenses are going to be too high. So I have seen for the COVID patients in our office, some COVID patients, positive patients were there. For his asymptomatic patient, 40,000 per day. Morning 2 tablets they will give, evening 2 tablets. 40,000 per day they are charging. See, that is anyhow gone by corporation, so they are saved. But what if he's a normal human being? I mean, normal person, if he doesn't have insurance, it is very risky. So it's advisable. ATD benefits, it's very useful benefit. Whatever, why I tell you, first of all, when you pay premium, you have the deduction. Yes, in the income tax, every year you get deduction. And second thing, let's say every year when you keep paying the premium, in the next year, 10 years, somebody gets hospitalized, you can, whatever the premium amount you paid, definitely it will, yes, it will be used. That's what it is now. So these two things mandatorily you should have. Then other things are new provisions are there. G, all of you know this, whatever it is. If you are not receiving HRA, still you are paying rent, you can make GG benefit. That's what it is now. Let us take tax slabs. Tax slabs, let us discuss. Till financial year 1920, that is assessment year 2021, this is existing tax slabs. And then what happened? For financial year 2021, so that means now we are in 2021. So we are going to file the returns in July. This is with respect to old provisions only. The new provisions are applicable from the financial year 2021. That's what it is now. There are two tax slabs for the upcoming year. Upcoming year, when I say, yes, financial year 2021, assessment year 21-22. Let us discuss the old slab first and let's come to the new slab. Now, up to 2.5 lakhs, all you know that. So you don't have to pay any tax. This we call it as basic exemption limit. The basic exemption limit is 0%. Then 2.5 lakhs to 5 lakhs. So if it is more than 2.5 lakhs, but up to 5 lakhs, 5% you need to pay tax. Now, suppose if your total income itself is not, taxable income itself is not crossing 5 lakhs. That means you need not pay any tax. Why I tell you? Because of the rebate you will be enjoying. How much rebate you will be enjoying? 12,000 up to 12,500. Provided this rebate you will enjoy, your taxable income is not exceeding 5 lakh. This point you have to remember. Suppose your taxable income is 5 lakh 1 rupee, then no rebate for you. Suppose, let us say person X has 5 lakhs income, no need to pay tax. Suppose person Y has taxable income 5 lakh 1 rupee, just 1 rupee extra. He has to pay 12,500 tax plus 4% on this. That means almost near to 13,000 he has to pay tax. This 1 rupee will make a big difference, as I told you here. So 5 lakhs is different from 5 lakh 1 rupee. That's what it is now. So there is no relief also. There is no marginal relief. The marginal relief is not given. That's what it is now. So up to 5 lakhs, so you need not pay any tax because of what? Rebate. If you are exceeding 5 lakhs, then what happens? If your income exceeding 5 lakhs, your tax computation starts from 2.5 lakhs. You need not look at that 5 lakhs is exempted. Sorry, it's not 5 lakhs exempted. It is only 2.5 lakhs exempted. Then we have, yes, 5 lakhs to 10 lakhs, 20% income we have, and then above 10 lakhs, 30%. Rebate is available. Remember this rebate, whose taxable income is not exceeding, total taxable income not exceeding 5 lakhs. So any tax computation we do, whatever taxable income is there, 4%, yes, health and education says we have to pay 4%. Remember this old slab, yes, rebate available only for up to 5, income up to 5 lakhs. If you are exceeding 5 lakhs, no rebate for you. It starts from 2.5 lakhs that apply a slab. Then new provision you see, financial year 2021 it starts. That means assessment year 21-22. That means when you are filing your returns in the next year, when I say 21 July, during 21 July you have to bother about this. Yes, but let me tell you, now itself you have to inform your employer that TDS provision, whether you are going to opt for earlier, existing scheme or new scheme. Therefore, Accordingly, the employer has to decide that what is the total income under the respective schemes, and then taxability should move on. That's what it is now. But let me tell you, the assessee later on, that means at the time of filing, once again he can change his mind, and whatever is beneficial to him, he can opt. So now let us discuss up to 2.5 lakhs, 0, 2.5 lakhs to 5 lakhs, 5%, 5 to 7.5 lakhs, 10%, 7.5 to 10 lakhs, 15%, 10 lakhs to 12 lakh 50,000, 20%, and then 12.5 lakhs and above up to 15 lakhs, 25%, more than 15 lakhs, 30%. This is what various slabs are there. So you can see marginally 5% they have increased. That's what it is now. So now rebate once again available for what? Tell me. Total income not exceeding 5 lakhs. If your income exceeds by 1 rupee also, now no rebate for you. Your tax calculation will start from 2.5 lakhs. Remember that. Yes, cess is 4% extra. Here comparison of old and new tax slabs. Let us compare old slabs and new slabs. Whatever we discussed, everything holds good here. Whatever the calculations we made, these calculations holds good. The only thing you have to remember, the surcharge, right? See, surcharge, it was there in existing slab also, new slab also. The effective tax rate applicable to you, this is listed. What is this 42.74? This is called as marginal, yes, maximum marginal rate. This is the highest rate individual get taxed. So in the new scheme also same thing, 42.74, the highest rate will be taxed. So now surcharge, what is the surcharge? Suppose think like you have 50 lakhs income you are having. On 15 lakhs, simple calculation will do 30%. Let's not get into the minute breakup. So in general calculation, for 50 lakh, 30% comes to 15 lakhs. On 15 lakhs, whatever tax is there, extra you have to pay 10%. On 15 lakh, 10%, it comes to 1.5 lakhs. 15 lakh plus 1.5 lakhs, it comes to 16.5 lakhs. On 16.5 lakhs, 4% extra you have to apply cess. That means health cess, all those things we have to apply. That means the surcharge, you remember, only in case of if your taxable income is 50 lakhs. If it is more than 50 lakhs only, surcharge comes. Otherwise, no surcharge. So those assessees whose taxable income is less than 50 lakhs, you need not bother, no surcharge for you people, right? So still the time is there for you to grow to that level. So 50 lakhs to 1 crore rupees, 10%. So 1 to 2 crores, 15% surcharge, like that calculations are there present with you. So 37% surcharge, you see, that's what the highest rate of surcharge. Yes, you have to remember. Now, in the new slab also, whatever we discussed previous slide, the same thing it is. The rates are discussed, tax rates. So slowly, gradually it is going up, like that you can see. So this slide you can go on. Whatever we discussed in previous slide, it holds good. Deductions, which has to be, see, let us compare now old regime versus new regime. We have seen the tax slabs. So we have to understand what are all deductions we have to forgo. First one is standard deduction. As you know, every salaried employee, so by default, you can claim 50,000 standard deduction under what? The existing tax scheme. That's what it is. Existing tax law. 50,000 standard deduction. You need not do anything. Still, it's available straight away. That's what it is now. Let me tell you the background of this standard deduction. The standard deduction was not there over to previous year. 2 years back, it was not there. Yes. So what happens here? Why the standard deduction is introduced is, one is transport allowance. The transport allowance is taken out. Earlier we had transport allowance, that is removed, and the medical treatment, medical reimbursement and all 15,000 rupees, we had that benefit. Even that is also taken. Instead of these two benefits, it's taken out, and this 50,000 straight away, now it was given under existing law. But what is happening under the new scheme? The standard deduction is taken out. 50,000 rupees is not available under new scheme, whereas standard deduction is available under existing tax scheme. Next, house rent allowance, HRA. HRA, once again, this benefit is not available under the new tax regime. Yes, house rent allowance, all of you know. So every month with the salary, you'll be receiving some allowance. So why this intention of the allowance is compensate for your rental expenditure, like that it is. Whether you have your own house or whether you have you're paying rent, still this allowance is given by the employer. So that is depending upon whatever it is now. If you're not paying any rent, it was fully taxable, existing tax law. Now what happened? This house rent allowance, whatever is there, yes, no benefit under the new regime. Then as you know, ATC just now we discussed whatever the life insurance premium payment, contribution to PF, tuition fees, so on. The big list we have discussed in the previous slides, all those things. So this 1.5 lakhs rupee benefit, whatever was there, it is not available in the new regime. Then ATCCD 1B, so up to 50,000 rupees. So this is very interesting. If you're a salaried class, suppose you have a lot of money, surplus money with you, you don't know where to invest. So please just have an inquiry about this. ATCCD 1B, 50,000 rupees additional you can invest. That means this is in addition to ATC. This is in addition to ATC, 50,000, yeah, that's what. ATC, you know, 1.5 lakh rupees we have. Then ATCCD 1B, it is 50,000 rupees extra you'll be getting. So those who are still not aware of this provision, under existing scheme only you can take out, not under the new regime. Yes. That means ATC 1.5 lakhs plus 50,000. In our office, many employees are taking benefits of this. ATD, just now discussed, ATD medical insurance for self and family, that's what is 25,000. For if parents are there, again 25,000 you can take. If parents are senior citizen, 50,000, like that. If assessee as well as the parents are senior citizens, up to 1 lakh rupees you can take the benefit under the existing scheme. Whereas ATD not available in new regime. That's what you have to remember. And then ATE, interest on education loan. So it's not available in the new regime. 24B, section 24B is very important. So everybody's dream is what? So constructing a house. So constructing a house for your own residence. That means self-occupied. So self-occupied, whatever the housing loan you are taking, the interest, that benefit up to 2 lakh rupees interest you can claim. Where? Existing tax law. This benefit is not available under new regime. Whatever the 2 lakh rupees benefit was available as income of SOP, self-occupied property, 2 lakh rupees. This benefit is not available under the new regime. Then these sections, as I told you, ATEE, these are all new sections. Those who don't have the house, for the first time home buyers, this ATEE, EEA, all these things came into picture. So 50,000 rupees in financial year 16-17 introduced, and this got introduced in the financial year 19. So these two benefits also are not there in the new tax regime. Yes. Then EEB, electrical vehicle, whatever we discussed, 1.5 lakh rupees, it will be not there in the new tax regime. Yes. TTA, whatever your interest on savings account, up to 10,000 rupees deduction you can claim under the existing law. But if you're opting for new regime, once again we lose this TTA, 10,000 rupees interest on savings account. Then ATTTB, senior citizens, same thing, interest benefits for senior citizen up to 50,000 rupees. If you're opting for new regime, you have to lose 50,000 rupees. That's what it is now. ATG, donation to we saw 100% category, whatever it is now. So fund, trust, charitable institutions. So what does that tell me? You can't claim those benefits. So these are all benefits you have to forgo. What are all standard deduction, HRA, ATC, ATCCD 1B, ATD, ATE, 24B, ATEE, ATEEA, ATEEB, ATTTA, and TTB. Last one, ATG. These, whatever the either deductions or exemptions, whatever it is there. Yes. So this you have to forgo in the new tax regime. See, this is what just now we discussed. So new income tax regime deductions. So employer contribution to pension account, whatever it is. So this benefit is available. In the new regime, what happened? This benefit is available. See, in simple words, what this calculation is, whatever NPS is there. As you know, NPS, most of you are aware, salaried class. NPS is the benefit wherein employee contributes 10% and employer also contribute 10%. For government, it has become employer 14% now. Whatever employer is contributing, it is a benefit. Are you receiving in your hand? You are not receiving. Who is the beneficiary? The employee is the beneficiary. Therefore, to be frank, actually employee should get taxed for this. But what government has done, government has shown a soft corner. Anyhow, the employee is not receiving benefit now. The intention is pension towards retirement. Therefore, whatever employer contribution to NPS is there, that is not taxable. It is exempt. We call it as EET. This concept you remember, EET means exempt tax. What is this concept exempt tax? Like employer contribution to NPS, at the time of contribution, let us say in the financial year 1920, employer contributed, let's say 1 lakh rupees. It is exempt as of now. Now, and then deduction. That's what is now. Next year, when interest is earned, then interest is also exempt. But at the time, let's say 60th year, at the time of retirement, once you are receiving a big corpus, it is taxable. So, but government again, once again, has shown soft corner, certain percentage they have exempted. Then, allowance to meet the cost of tours, travels, transport allowance to Divyang, this is kept. Transport allowance to ordinary person, it is taken out. Right? As I told you, standard deduction is given in place of this transport allowance as well as so medical reimbursement, all those things. So once but only in case of Divyang, physically challenged, this transport allowance 3,200 per month, it is continued still. Then conveyance allowance for office duties, conveyance allowance for office duty, it is allowed. Then additional employee cost, let's not get to this much technical. Yes, so all these things are available. What is not available is, so major chapter 6 reductions. What is major chapter 6 reductions? This big list we saw, just now we are seeing the big list. So that deduction is not available. Then interest payable on home loan, whatever it is, self-occupied property, 2 lakh rupees, no benefit, standard deduction, HRA, these benefits are not available. Now, let us compare. So 2 minutes, let us compare what happens if your income is 8 lakhs, what happens in the new regime and existing regime. If suppose your existing regime, new regime. If your income is 10.5 lakhs, what happens? If your income is 25 lakhs, what happens? See, these deductions, suppose already know, most of you in the existing scheme, the salaried class, already would have started saving, like LIC, we all know we have taken LIC, medical insurance, and then donations, these kind of stuffs already we are used to. Then you see here, let us say in the existing scheme, you have ATC benefit 1.5 lakhs, standard deduction 50,000 rupees by default you can take, NPS investment, as I told you, 80CCD 1B, right? Like that it is now. So this 50,000 rupees additional benefit. 80D health insurance 50,000 rupees. We assume 50,000, 25,000 for self and spouse, and 25,000 for parents put together. That's what 25. But it can be more than that also, as you know. If it is anyone is senior citizen, it will differ. Then 24B we are not taken here. If you want, you could have taken, but still, since it is only 8 lakhs, we are assuming that only these benefits deductions we are going to deduct. So the total of the deduction is 3 lakh rupees. Out of 8 lakh rupees, in the existing scheme, the total deduction, let us deduct 3 lakh rupees. So therefore 8 lakh minus 3 lakhs, it will be how much? 5 lakh rupees. Since it is 5 lakhs, you don't have to pay tax. Why? Because as I told you, exactly 5 lakhs. So you need not pay a single rupee tax. Why? Because of rebate available. Rebate available under 87A. Suppose the same 8 lakh rupees you have, these deductions, ATC, standard deduction, NPS, 80D, these benefits are not available for you in the new regime. So therefore what happens? So therefore, what you have to do? 45,000 rupees tax you have to pay. Totally how much tax you have to pay? On 8 lakh rupees, 45,000 you have to pay taxes. You remember that. Just we are not taking these deductions. Why? Because these deductions are meant only for existing. Suppose your income is 10.5 lakhs, 10.5 lakhs. So once again, ATC, standard deduction, NPS, 80D benefits. So housing loan we are taking. You could have taken housing loan here. Since the intention is 5 lakhs below, you need not pay tax. That's what we didn't consider here. Otherwise, you could have taken here also. 2 lakh rupees, 24B benefits, and then LTA, leave travel allowance 50,000. Yes. So total deduction possible is 5,50,000. 5,50,000. Yes. Total benefit. Yes. Sorry. Total deduction. 10,50,000 minus 5,50,000. That comes to 5 lakhs. Once again, if you do tax planning properly, you need not pay any taxes, provided all these deductions are taken care. Deductions and then some of the benefits you have taken. That's what investments you have made. Whereas in the new scheme, yes, these things, whatever is there, it won't be considered. 85,000 rupees you have to land up in paying the taxes. Suppose your income is 25 lakhs. Your income is 25 lakhs. All the benefits, whatever we discussed here, 5.5 lakhs, it holds good here. That's what it is now. 25 lakhs minus 5.5 lakhs, 19,50,000. This 19,50,000 is net taxable income, or taxable income, we can say. If you calculate, apply the tax slab on that, tax comes to 3,97,500. That's what it is now. And then if you can compute tax under the new regime, it comes to 4,87,500. Now, if you ask, sir, is new regime always not beneficial? It is beneficial when, suppose, let us say you are new to employment. You are new to employment. You don't have any savings. So what you can do? So see, first of all, you want to take these benefits. What you have to do? You have to do savings. If you don't have savings, the new scheme also works favorably to you people. Yes, provided you don't have these existing investment options like that it is. Then you may ask, sir, what is the logic behind the introducing new regime? The introducing new regime, see, the economy was slow. First of all, the economy was slow during the last budget. They want to give a push to the economy. Therefore, they wanted the more money in the hands of consumers. The more money in the hands of consumers. So the Nirmala Sitharaman ji is trying to inspire the youths by, yes, whatever the amount is there. So you need not get fund blocked here. So you can spend the money. That's what. You decide whatever money you want to do. Let me not put restriction by saying that you deposit here ATC. That's what it is now. You do whatever money you want. Like an American concept it is. That's what. Slowly, gradually, they want to move from the conservative savings aspect to the towards the spending strategy. Then ITR forms. So ITR forms for individuals, ITR 1 is relevant. So for individuals being a resident, other than not ordinary resident, just remember ordinary as of now resident. So if your income, total income is not exceeding 50 lakhs, provided having income from salaries. If you have income from salaries, only one house property. If you have more than one house property, then ITR 1 is not applicable for you. Other sources, only interest aspect, and agriculture income up to 5,000 rupees. If agriculture income is exceeding 5,000, then ITR 1 is not eligible for you people. Then ITR 2. See, for we individuals, ITR 1, ITR 2, and then ITR 3, and then ITR 4. These things are commonly used. That's what is the ITR 2 for individuals and HUF not having income from, yes, PGBP, profits and gains from business or profession. That's what is now. Yes, remember that any capital gains, all those things we have, then we can use this ITR 2. ITR 3, just go through this list, whatever is there. Then ITR 4 for the ITR 4 for individuals, HUF firms, other than LLP, all those things, turnover 50 lakh rupees, remember, yes, having income from business or profession, which is computed under presumptive head. These are all 44 AD, 44 ADA, 44 AE, these are all presumptive heads. Then ITR 5 for persons other than individuals, HUF, company, that's what it is now. So other than person, see, the definition of person includes 7 category of persons. So natural human beings. So we are all natural human beings. Then HUF, Hindu Undivided Family, company. So we'll be having trust. So then AOP, association of person, body of individual, artificial juridical person. So many definitions are there. They say ITR 5 has to be used by person other than, in the 7 category of definition. So other than these 4 people, remaining people will use it. For companies under ITR 6, for companies other than companies claiming exemptions under 11, just go through all these things. For us as an individual, as a simple salaried class, ITR 1 is relevant. If your income is more than that or more than one house property you're having, then ITR 1 is not relevant for you people. That's what it is now. Yes. Then due date for filing returns. The due date for filing returns, as you know, 31st July of the assessment year. Suppose our previous year ends on 31st March 2020. Our previous year ends on 31st March 2020. Our assessment year starts from 1st April 2020. That's what it is now. So 31st July 2020, we are supposed to file our returns. That means after, what does that tell me? Couple of days. That's what it is now, technically speaking. But because of the pandemic, the government has extended this IT filing this year till 30th November. So technically speaking, always the salaried class, as a salaried class, we have to file our returns, yes, 31st July of the assessment year, provided you are not a tax audit assessee. If you are eligible, if you are doing business, you are a tax audit assessee, then the dates gets moved to 30th September. So for the business assessee, if you are having tax audited, tax audit has certain turnover criteria and all. If you are eligible, if you are eligible for tax audit, then 30th September is the due date of filing the returns. Otherwise, If you're a simple business, normal business, not great turnover, so 31st July, that's what it is now. So then all others, cooperatives, trust, companies and all, 30th September. Now, what is the consequence? What are the consequences of not filing your returns? Suppose, let us say, you didn't file returns. What will happen? So let us discuss this. Suppose you are a business associate, you have loss. If you are having loss, if you don't file returns in time, you can't carry forward that loss to the next assessment year. Sir, suppose I am having house property loss. House property loss is exempted. Suppose due to lettered property or due to SOP, self-occupied property, you are getting loss under the house property. When you have loss under the house property, such a loss, yes, you can carry forward without filing the returns also. But it is advisable, always file returns. Why? Because the filing return should be a habit of every individual. We are accountable for the country, like that. Even if you don't have the income, still you go ahead and file. You don't know, tomorrow it will become a track record. It will be required for your CIBIL scores and all. Whenever loan is granted, so they will check for how many previous year you have filed the return. And not only filing return, you have to ensure that the assessment has happened for that. That also you have to ensure. Returns file ಆದ್ಮೇಲೆ assessment ಆಗಿದೆ ಇಲ್ಲ ಚೆಕ್ ಮಾಡ್ಕೋಬೇಕಾಗುತ್ತೆ. Process ಆಗಿದೆಯೋ ಇಲ್ಲ ಅಂತ ಚೆಕ್ ಮಾಡಬೇಕಾಗುತ್ತೆ. That's what it is. Then suppose you did file, that's what it is now. So you are liable for interest under section 234A, 1% per month till you, yes, file it or till you payment of taxes happen. Suppose you have paid already, tax is paid. Tax, whatever tax is there, let's say through TDS and all you have paid. That's what it is now. Then 234A, so interest on delay in filing, it won't be applicable for you. So what happened? Late filing fees is applicable for you. Then delayed refunds. Suppose you don't file the returns in time, what happened? Your refunds gets delayed. So that's why many employees are very, what is that you can say? Those refund employees immediately during May, June, they start filing. Why? Because so within next 15 days, 20 days or 1 month, 2 months, they will get refunds. Nowadays department is fast. You will get refunds much faster. Late filing fees. Late filing fees, what happens? Let us discuss this late filing fees. Suppose you are filed the return too late. So how things will happen? Let's see. E-filing date, that's what it is now. Total income below 5 lakhs. If you are having total income below 5 lakhs, that means total income below 5 lakhs means you may think that you need not file. Sorry, it is not like that. So many books they say you need not file. It's not like that. Please understand. If your income is more than 2,50,000, if your gross total income, you remember that gross total income, that means before chapter 6A deduction. If you're before chapter 6 deduction, the gross total income is more than 2.5 lakhs. So you are supposed to file your returns. That's what you have to remember. So up to 31st August 2019, this is last year, previous year example we have taken. So 2019, when you should have filed the returns? July, 31st July. But what government did? 1 more month they extended. Like this year they have extended for November 30th they have extended. Last year in 2019, what they did? Government, what they did? 1 more month they extended. 31st July was your due date. They extended to SSC 1 more month extra. So up to there. So no, if you are not filed the returns, 0 penalty. Why? Because it is a proper due date only. 1st September to the December. That means so 4 months: September, October, November, December. In that period, if you file, so 1,000 rupee late filing penalty. We call it as fees. We don't call it as penalty, but it is a penal nature only. Remember, 1,000 rupees. And then if you file between 1st January to 31st March, so once again 1,000 rupees. So why? Because your 5 lakh rupees is total income. Anyhow, you are not liable for pay tax, but still you are liable to file your return. Why? Why? Because if your income is more than, if your gross total income is more than 2.5 lakhs, then you are supposed to file your, yes, returns. That is what you have to remember. Suppose your total income is above 5 lakhs, then what happens? If you till due date, no penalty for you. 1st September to the December, 4 months period, 5,000 rupees penalty. I mean late filing fees. If suppose you don't file in that period also, maximum penalty of late filing fees is 10,000 rupees. Some of my friends, so school friends this time, so during the March they called. So can't you avoid paying this penalty? There's no option. You have to pay. That's what it is now. Yes. So now late filing fees we have discussed. Therefore, have the habit of filing Yes, returns in time. See, earlier what chartered accountant used to do, so they used to file everybody's return. Their own return they were not filing. Why? Because they knew the concept that whatever taxes has to be paid to the government, if it is paid in time, then there will be no penalty as such. In 234A, there will be no interest if you have paid the all taxes in time. That's what it is now. But because of these provisions, everybody has to file. Even the chartered accountants will file their returns in time now. Form 16, another 10 minutes time I'll take, I'll finish off things. Form 16 has part A and part B. As you know, the Form 16 has to be issued by the employer. Whereas Form 16A is for the basically your other than salaried class. Any TDS is done, so you'll be issuing Form 16A. So Form 16, so earlier it doesn't have the much importance. I mean, I'm talking of 5 years back. But now let me tell you, Form 16 is much more important than your income tax returns. It is such an important thing, and the finance department, Ministry of Finance, they're planning to change the Form 16 in such a way that the high financial transactions has to be brought. For example, any shares, any profit you made on shares, any big financial transaction, everything has to be brought in Form 16. That is what those people are planning. So you have to take care of your Form 16. Whenever employer is filing your returns, ensure that all the details are there in Form 16. Don't miss out any detail. Any income from other employer is there, even that should be appearing in the annexure 2. So all details should be keyed in. Let us understand. So Form 16 has part A and part B. Part A consists of details of tax deducted at source on salary, like that it is. It is generated and downloaded from Traces portal. We have something called as website Traces. Yes. So from the Traces, it has to be generated by whom? Filing also should be done by employer. Generation also should be done by employer. And once it is generated, that has to be distributed to the employees. The part A consists of the following: name of the employer, address of the employer. Suppose the employer is SSMRV College, name and address, employer. PAN number and TAN number of employer. That's what it is now. And PAN of employee PAN should be then that. And the most important is summary of amount paid. Whatever amount has been paid, gross amount has been paid, and TDS which has been deducted from employee, that will be dated. So that means every month how much employee received salary and how much tax has been deducted, that information you can see there. Form 16 part B. Form 16 part B, it is an annexure. That's what it is. It's newly. See, earlier what used to happen, I'm talking 2 years back. This Form 16 part B, employer used to key in Excel, and then it will be signed by the college, head of the employer. So depending upon the head of the finance department or college principal, like that it is now, it will be signed and distributed along with the Form 16 part A. Part A will be generated in the portal, Traces portal, and part B will be prepared manually by the employer. But now what has happened? Even part B also, it has to be generated in Traces portal. That means it is the employer duty to collect all the information from employees. Anyhow, salary detail they will be having. Other than salary detail, house property incomes, and then interest incomes, and then if any other source they are having, right? What and all sources there, it has to be brought in Form 16. I'll tell you, in next 2-3 years, Form 16 is going to be very, very crucial. So why? Because ITR is it is going to become dummy. Why? Because Form 16 replica will be your ITR. That's what. If something goes wrong in Form 16, so ITR will go wrong, right? Like that it is now. So they're making 2 strict provisions with respect to Form 16. So take care that all details, it's employer duty also to collect all information, and employee also. So you have to share all your details. What are the different sources of income you'll be having? You have to share in the Form 16 part B. What are all Form 16 part B has? Detailed salary breakup. That will say what is my gross salary, what is my in the gross salary also we have to say how much is basic salary, how much is HRA, so how much is allowances. All those stuffs will be there. That has to be brought. Then allowance, whatever the allowance is there, even though it is exempt, that has to be stated. Deduction, Chapter 6 deductions. So Chapter 6 deductions, just now we discussed in some of the previous slides, even that has to be brought into account. Relief under section 89, whatever the reliefs is there. So relief where it comes, see salaried employees, where the relief comes is, you might have seen arrears of salary. If you're in government field, arrears of salary will be receiving 3-4 years salary, some arrears, so we'll be receiving. So because you're receiving arrears, so during this year you're having too much income. So 4-5 years, so you're having too much income in this year. So to avoid that, what department has done? Some relief calculation is done. Relief calculation, how it happens is, if this salary is received in that respective financial year, if the salary is received in that respective financial year, so what would have been tax implication? Because it is received in this year, what is the tax implication? Whatever the burden you are facing, that is given as a relief. That's what it is now. So we'll see some of form 16, how it looks like. Let us see. Yes. So this is the form 16, a format given by the income tax department, like that it is now. So it looks so dry. So this file has been shared with the management. We can just go through this form 16. I will show you the live form 16, how this live form 16 will be. Yes. So 2 minutes. Yes. So this is my wife's form 16. She is working in Eon Consulting Private Limited, software engineer. You can see here the address of the employee, name of the employee, address, all those things fine. So updated, you can see 20th June 2020, the filing has happened. That's what it is now. Certificate number you can see here. This is part A, form 16, part A. That's what it is now. So like that I told you, part A as well as part B. So what it all consists in part A, you can see here. Yes. PAN of the deductor. So PAN of the deductor, so the employer PAN, employer TAN of the employer. So PAN of employee, sorry. Yes. So PAN of the employee, it is there, PAN of the employee, and then what happens? Yes. CIT, TDS, Commissioner of Income Tax TDS, with circle and all, it says assessment year 2021. When assessment year is 2021, previous year will be 1920. The previous year you can see 1st April 19 to 31st March 20. These are all details you have to see. After that you can see for quarter 1. For quarter 1, what is the total salary she has received? Yes. And what is the TDS? TDS in that quarter, tax deducted, deposited, like that it is. So second quarter, same way you can see what is the gross salary received and then TDS portion, like that it is now. So the third quarter, like that down. So we'll move on till the fourth quarter. Total TDS by the employer. Which employer? Single person alone. So 54,793. Then further we'll have breakup. So further we'll have breakup. You can see if you're a government employee, then book identification number comes, bill for you people. So otherwise, what happens if you're other than government employees? SIN number, Challan identification number. That's what it is now. So you can see here deposits. That's what it is now. So DSR code, date, different challans. That's what it is now. So amount, TDS amount, 4,000, 4,000, 4,000, 4,000 odd, like that it is going on. This is digital signature. You can see here it is digitally signed by the employer. Nowadays everything happens through digital signature. So then these are all breakups, various breakups. Totally this breakup will be how much? 54,793. Now one of the most important aspect which the employees will not observe is this status. This it has to be F. Here, whatever this here, it has to be F. F means it is final. That's what it is now. This, if it is not F, that means something has gone wrong. This please observe whenever you receive form 16. That's what form 16 part A. The status in old task should be yes. F means final. What is the meaning of that? Just we'll discuss. So it has to be signed by the employer, whoever it is. So that's what it is now. Digitally signed. That's okay. Now you can see here F means what? Final. That's why here whatever columns I showed you, you have to check all these things has to be F. Final. Final. If it is not other than F, that means something is wrong. You need to check with your employer once. That's what it is now. So F, it has to be final. That's what it is now. If it is U means unmatched, P means provisional, O means overbooked. That's what it is now. So what is important? You have to look into F. That's what it is. Final. Next thing we have Form 16 Part B. See, Form 16 Part B, as I discussed. So earlier, 2 years back, it was prepared manually in Excel sheet and it is shared by the employee. My employer is to sign it and put a stamping. That's what is now. Now what is happening is, so it has to be all the Annexure 2. Generally, we call it as Annexure 2. Annexure 2 is for Form 16 Part B. In the Annexure 2, very minute details, 92 columns it has. 92 columns information has to be provided by the employer. 92 columns has to be filled by employer. Let me tell you, in the upcoming years, this 92 is going to cross 100. Why? Because I'm telling you, the government is looking at people are escaping from the taxation. The government is looking very strict with respect to Form 16. All the high value transactions, even you are doing shares trading, whatever it is, everything will be brought to Form 16. That's what it is now. So Part B, what and all it consists, let us see. So that's what it is now. Part B, gross salary. You can see here gross salary information. So gross salary 17.1, salaries 17.1. We have perquisites and then pillows. Pillows means profit in lieu of salaries. All this information. So this what is now total salaries. Yes. In that any exemptions? Yes. HRA, house rent allowance 1013A 62,460. Then. So after the whatever exemption, this is what it is now. Deduction. See, this is very beauty of this Form 16. See, section 16, salary head comes under 15 to 17. So whatever the deduction is there, whatever I showed you earlier here, it is not properly designed. The author has not properly designed here. Let me tell you, the section 16 comes under salaries only. We have 5 different heads: salaries, house property. So different heads will be having. So here section 16 comes under salaries only. So standard deduction by default will be getting 50,000 rupees. Sir, what if my income is not 50,000? It will be restricted to that. That's how it is now. Then entertainment allowance, only in case of government employees, this entertainment allowance is, yes, what does that tell me? Deduction allowed. Tax on employment, that is what tell me, your professional tax 2,400. So total the deduction under 16 is 52,400. You can see here income chargeable under head salary 8,50,000 odd. So then what happens? Other source, if anything, those information has to be provided. So nothing has been shared with the employer. Therefore, gross total income is 8,50,298. Then ATC deductions. You can see ATC deductions, LIC premium. So those things 1,51,960. So that is restricted to 1,50,000. Therefore, yes, that's what I say. Some people I find whenever, see for entire KPCL head office, I do all this Form 16, so all those IT filing and all. But I find some of the employees 3 lakhs and all they say. What is the point in ATC? 3 lakhs and all. You put it in 80 CCD, no, 50,000 rupees you try to work out. That's what I'm saying, trying to say here. 80 CCD 1B, you put 50,000. So there it will be helpful. 50,000 more deduction, you will get it. These are all things. Ultimately, taxable income is so much. You can see a taxable income. So 7,928,000. Yes. So 7,928,000 you can see here. If you calculate tax on that, it comes 52,860. If you ask me old or new regime, see new regime it starts from 2021. We are still in old regime only. This is the last year of exclusively old regime. Next year onwards we have option old regime as well as new regime. So now health says totally tax payable is 54,000 odd. That's what it is now. So the breakup is available, net tax payable. So TDS is already deducted. You can see further breakup, further detailed breakup of this form number 12BA. This is what you can see. Full detailed things will be there. So the perquisites, what are all perquisites, benefits employee received. So those details is there. Then the details of how much is basic salary, how much is house HRA, how much allowance, how much salary premium. So gross salaries. Complete details will be there in the Form 16. I tell you, Form 16 is very important rather than your income tax filing. I'm not saying that you should not file. You have to mandatorily file it. So take care if you are going for any loan and all. So if you are salaried class, So first thing they'll be checking is Form 16. I have seen some of the personal loan givers, they'll take Form 16, not your ITR, because they know where to catch the neck. That's what it does now. So Form 16 is very crucial. So work on it. You try to bring all your income, whatever possible income is there. So what generally employees do, they include this other income afterwards, after the employer gives Form 16 at the time of filing. That's a wrong way. You bring everything into Form 16. So this is what it is now. So slide. So tomorrow we'll be seeing the practical aspects of how to file the income tax returns. So preferably those who are attending tomorrow, if you have laptop and login ID passwords, if you know, it will be well and good. So tomorrow I'll show you the practical approach, how this can be, filing can be done.
Thank you, Lokesh sir. Hello.
Yes, sir.
Thank you, Lokesh sir.
Yes, sir.
Let us conclude the day one national level online workshop. Today we understood the basic aspects of income tax deductions as well as about Form 16, new regime and the old regime and so on and so forth. We are extremely sorry for the inconvenience created in the beginning of the session. So tomorrow let us meet again and learn how to file IT returns and claim the refunds. Thank you all, dear participants. Let us meet tomorrow.
Yes, from my side also. So I'll ask a sorry for inconvenience caused because of the home working, the internet issues and all. I'm really sorry for this.
Lokesh sir, it was worth waiting, sir. Thank you so much. This is Ajay this side. Yeah, thank you.
Sir.
It's okay, sir. It's okay. Thank you, Ajay.
Thank you so much, Satish sir. Thank you, Nagaraj sir. Thank you, Gokul sir.
Thank you.
Thank you all. Let us.
Yeah.
Hello? Sir, are we getting feedback now?
Madam, there is one more day session remaining. Kindly attend tomorrow's session as well. And post tomorrow's session, you would get the feedback.
Sir, how about PPT presentation share, sir?
Ma'am, everything will be shared after tomorrow's presentation. The video also will be uploaded to our official YouTube channel, madam.
Okay, sir. Thank you, sir. Thank you.
Thank you so much.
Hello. I have one question, sir.
Yeah, Lokesh, sir. Tell me.
I'm Ratesh from New Horizon College. My question is there any deadline for tax deductor to submit TDS details?
Shall I answer, sir?
Yeah, please, sir, please.
Yes, sir. Actually, whatever TDS is there. Hello?
Yes, sir.
Whatever the TDS remittance aspect is there, 30th April is the deadline. Remittance, payment of TDS. Whereas filing of TDS is there. Sir, is it audible?
Yes, sir. It's audible, sir.
Yes. Sir, TDS, to pay the TDS, 30th April is the last date.
Okay, sir.
To file the TDS returns, quarterly return filing, 30th May is the last date. But this time due to pandemic, till July 20th they have extended.
Okay, sir. Okay, sir. Thank you, sir.
Thank you.
Thank you so much, Lokesh sir. Thank you so much.
Sir. I'm extremely sorry, sir. I don't know how this happened.
Sir,
internet connection.
No problem at all, sir. No
Sir,
problem.
whenever I take classes, this never happens. This has happened today itself. I'm feeling so sorry.